In 2013, I purchased a home for $2.8 million. Beautiful, lovely, lovely home. Very proud of it. Loved it the whole time. I sold it in April of this year, thank God, for because our market's starting to soften a little bit. It sold for 4.53. So on
Yay,
paper,
you killed it.
I killed it. Woo! Right. On paper, I have a profit of $1,730,000, which, by the way, that's the way the IRS looks at it, but we'll get to that in a second. So the question becomes, well, gosh, why would you sell the house and rent a house, the same kind of a house, $4 million house? Why would you just keep the house? You're doing so well. So here's the way the numbers really break down. There's fiction and then there's reality. There's perception and reality. So let's separate the two for a moment. It cost me, and I put down $2 million as a down payment on the house. Huge mistake in retrospect. I mean, the opportunity cost, if I had put that into multifamily, well, we'll get to that in a moment. Let's break down the actual numbers. So let's get out a piece of paper. So I purchased the house for $2.8 million in 2013, June of 2013. I sold the house in April of 2021, less than 8 years, for $4.5 million, $300,000. Okay, and that's at 16 Treetop Way. Don't take my word for it. You can look all this up. 16 Treetop Way, Kentfield, California, profit $1.73 million. It costs me every month about $12,000 to carry that house. Taxes, mortgage, insurance, upkeep. Typical gardeners, pool guys, you name it. So it cost me $144,000 annually to hold that house. But I live in California. Even if you don't live in California, really, to get that $144,000 out of the bank, I'd earn $288,000, 50%, right?
Right.
So $288,000 a month times 8 years was $2.3 million. And I purchased the home for 2.8. So it cost me really over 8 years, $5.1 million to own that house.
Wow.
Plus a commission to sell it, $112,000, 2.5% commission to buyer's agent. So I was into that house for $5,216,000.
Sheesh.
Minus what I paid for it, $4.53 million, which is the 2.8 plus the 2.34 to hold it. So that shows me I really lost, ready everybody, $686,000. Why? Because I had no income coming in.
Right.
Now, by the way, that's not including the capital gains that I could be charged by the IRS because I have a gain there, but because I have a lot of multifamily, I may not have to pay all that because I have losses carried forward. I'll probably use against that, but that's not really the issue. The issue is I had an opportunity cost miss of $2 million. What if I had taken that $2 million and I bought a few hundred units, right? That $2 million after 8 years would now be worth at least $4 million. So I would have doubled my equity.
Hold on, I'll tell you. I'm doing the math right now.
Go ahead.
Let's see. Okay. So we average 15% year over year returns, not including tax write-offs.
Right.
Okay.
Yep.
So, and honestly, there have been years in the last 8 years where it's been way more than 15%.
Sure. Right.
Way more.
Right.
So, but let's just say 15% because that's an average through good and bad economies. Your $2 million would be worth $5,320,000 on one of our conservative deals, not saying that you absolutely killed it. And that's not including tax write-offs.
And I'd probably have that $2 million back in my pocket, tax-free.
Yep.
To then buy another piece of property. So now I probably would have at least. Go ahead.
That's not even including the cash out refi. So let's say we cash out refi year 3. I'm going to say 75% of your money. So that's 1.5. Let's just say 1.5. We get back out and cash out refi. Hold on. I'll tell you, this is going to be really fun. Equals that number times. There's another $3 million you lost.
Right.
Just by not being able to cash out your money.
Right.
Keep your investment in this other deal, cash out your money, and then reinvest. Right. So there's another $3 million.
Right. So let's say now, fast forward to where I am now. Now I've rented a gorgeous 3,500 square foot house, 280-degree views of the water, one flat acre in an area called Tiburon, California. Beautiful, magnificent place to live. And that cost me about $10,000 a month to live there. Well, guess what? These buildings, and my current buildings, would have paid for that
Yeah.
and do pay for it now. So now the money that I took from the sale of the house that I put in my pocket is going into our Cleveland deal.
Beautiful. Thank you. The next 8 years are going to be better than the last, is what you're saying.
Well, exactly. But the bigger picture to look at is, unless you have a net worth, and there's going to be a lot of blowback, and that's fine, I'm willing to take it. Unless you have a net worth of at least $20 million, what in God's name are you owning a house for? Because after depending on what state you live in, if you live in Oklahoma City, maybe $10 million. You live in California, New York, places of that nature, you've got to have at least $20 million before it makes any sense to do something stupid with your money like own a house.
Yeah, absolutely. Absolutely. So I'm doing some quick math here. I mean, well, let me sum this up. So you paid 2.8 million. What was your end up all out of cost? It was just over 5 million.
5.2.
5.2 out of pocket cost. So we didn't even take this a step further. What if instead of putting all that expense into the house, you'd invested that money as well? We're not even going to do that math.
Right.
So essentially, the 5 million could have turned into well over $8 million.
Correct.
Not including tax write-offs, which you desperately need in California. And with how much money you make and all the cash flow that your other assets are producing, you could have really used those tax write-offs as well. So really, we're looking at about $9 million difference between what you could have made and then you lost. You would have still spent money on a rental. So, we should throw that in the math. Maybe we'll do a nice little graphic for people, but still, we're talking about $9 million.
Take $1 million off just for the rental. It's negligible.
So $8 million.
Yeah.
That would have been really nice. And then now you throw it into the deals we're doing now and compound that $8 million. When we look at a 10, 15, 20 year snapshot of what that money would have been worth, it's absolutely insane. It's huge.